Hey everyone, welcome back to the channel. Today I've got a story that's going to absolutely blow your mind. We're talking about Bitcoin, Wall Street, Jamie Dimon, and why what just happened with JP Morgan changes everything. At the time of this recording, Bitcoin is sitting around $105,000. And guess what? JP Morgan, yes, JP Morgan, just announced that clients will now be able to buy Bitcoin through the bank. But this story isn't just about a price point or a policy shift. It's about how the mindset has changed and why you still have massive opportunity in crypto. So Jamie Dimon, CEO of JP Morgan, one of Bitcoin's loudest critics for years, just said something really important. He said, "I don't think people should smoke, but I'll defend your right to smoke cigarettes." Then he added, "I don't think people should buy Bitcoin, but I'll defend your right to buy Bitcoin." That's his escape hatch. It's not a personal endorsement, but it's institutional permission. It's legacy finance hedging. They're not screaming, "We believe," but they're making sure they don't miss the wave. JP Morgan isn't saying Bitcoin is the future. They're saying, our clients want it, we're not going to fight it anymore. You've got BlackRock with a Bitcoin ETF. Fidelity's in. The world's biggest asset managers are in the game. JP Morgan? They're risk managers first. They weren't going to jump in during the Wild West days. But now with regulation tightening and ETFs offering exposure, they can dip in without getting burned. Bitcoin is no longer fringe. It's been embraced by Wall Street. The moment BlackRock launched its ETF, game over. That was the institutional green light. Now JP Morgan's following suit, because if they don't, they lose relevance. Bitcoin has become the digital gold that Wall Street never wanted, but now can't ignore. If you're in crypto already or even just thinking about it, here's what you need to know. There's still massive opportunity. Institutions may have the money, but they move slowly. Retail, us, we move fast. Think about this. JP Morgan's clients just now got the option to buy Bitcoin. You could have bought it at $3,000, $10,000, $30,000. And even now at $105,000, there's room for growth, especially if institutional adoption snowballs. But here's the real edge. Understanding the narrative. You know what Bitcoin means. They're still figuring it out. Bitcoin isn't just a financial asset, it's a paradigm shift. And the people who see that early, like you, are going to be the ones who benefit most. Jamie Dimon may not like Bitcoin, but even he can't stop what's happening. So don't get distracted by the noise. Stay curious, stay informed. And if you're still sitting on the sidelines, maybe now's the time to start learning. It's a predictable move. He's trying to have it both ways. I still think it's dangerous, but hey, we'll let our clients touch it. But the real reason he's opening the gates now? Because the rest of the financial world has already crossed them. This is where things get interesting. There's Bitcoin, and then there's everything else. A lot of noise, a lot of speculation. But the real story right now is about financial rails. If you take dollars, treasuries, stocks, and move them onto crypto rails, you now have global 24/7 liquidity with instant settlement. That's not theory anymore. That's happening. And the technology powering this shift? It's not Bitcoin itself. It's stablecoins. This is wild. Senator Bill Hagerty just said on CNBC that stablecoin issuers could soon be the largest holders of US treasuries in the world. Yes, larger than China, larger than Japan. Why? Because stablecoins like USDC and USDT are backed by dollars and treasuries. As global demand grows, they buy more and more US debt. In other words, stablecoins might become the backbone of US dollar demand. Think about how ironic that is. The very thing that Washington feared would undermine the dollar might actually be the lifeline that saves it. That's not just innovation, that's geopolitical leverage. But of course, it wouldn't be DC without a little chaos. This past week, there was a huge back and forth in the Senate over stablecoin regulation. Here's what no one in Congress is willing to say out loud. Bitcoin is a neutral global asset. Stablecoins are becoming the new rails for dollar supremacy. And the US could either lead this system or get left behind. Right now, stablecoins are plugging holes in the traditional banking system. They're faster, cheaper, borderless, and most importantly, they're being adopted without asking for permission. So while some in government are still yelling about 2022, the infrastructure for 2030 is already being built. So what's the big takeaway? JP Morgan is in. Stablecoins are rising. Treasuries may soon depend on crypto-native companies. And Congress is trying to slow something they can no longer stop Bitcoin open the door. Stablecoins are paving the road. And you're watching the financial system be rebuilt in real time. Drop a comment below. Will stablecoins really become the backbone of the treasury market? Or will politics get in the way? If you're not subscribed yet, hit that button, because this story is far from over. The 2022 crypto crash and media panic. Political scapegoating versus financial reality, stablecoins versus banks during the same crisis, yield strategies with core and Bitcoin-backed loans, reframing crypto as infrastructure, not ideology. In 2022, crypto markets lost $2 trillion in value. That's trillion with a T, and politicians won't let you forget it. They say it was proof that crypto is dangerous, unstable, maybe even a national threat. But here's the part they're leaving out. At the exact same time, 3 of the 5 biggest bank failures in US history happened. So was this a crypto problem? Or was this a broader failure in risk management across the entire financial system? Today, we're cutting through the noise. First up, yes, some big firms in crypto failed. FTX, Celsius, Terra, and yes, 2 major stablecoins lost their pegs. But here's the bigger picture. This wasn't a crypto-only crisis. It was a finance-wide liquidity crunch. While Congress screams about altcoins, Silicon Valley Bank, Signature Bank, and First Republic collapsed. Billions in deposits gone overnight. Same time, same cycle. What changed? The Fed's rate hikes. The Federal Reserve told the entire market, rates will stay low for the foreseeable future. So everyone from banks to crypto lenders reached for yield. That was the game. Then, the Fed jacked rates higher and faster than at any point in US history. And boom, the risk takers got crushed. Was it irresponsible? Sure. Was it just a crypto problem? Absolutely not. That's the key. Crypto isn't separate from the financial system anymore. It is the financial system in a newer form. So when certain politicians get on TV and say things like, crypto nearly caused a financial meltdown, that's not analysis, that's theater. If someone said we should ban computers because a few hackers stole money, we'd laugh them out of the room. Crypto isn't a single product, it's infrastructure. Just like the internet, just like phones, just like databases. Saying this tech might help my political opponent, so we should block it, is nonsense. It's like saying no one should use Excel if Trump used Excel once. It's a distraction, and you're smarter than that. Let's revisit the stablecoin panic from 2022. Terra/Luna, total failure, but USDC, it repegged. Tether, still standing. Meanwhile, regulated US banks, insured by the government, imploded. And what did stablecoin issuers hold as collateral? US treasuries. The same stuff banks were loaded up on, and still failed. So maybe it's not about crypto versus TradFi. Maybe it's about who was honest about the risk and who wasn't. Now let's flip the script. While banks are failing, DeFi keeps building. Today's video is brought to you by Core, a Bitcoin native protocol that lets you earn yield just by holding Bitcoin. No lending, no bridging, no giving up your keys. You just lock up your BTC, help secure the network through validator elections, and earn protocol-level rewards from network activity. You get your Bitcoin back, untouched, after a minimum lock period of just 1 day. It's not magic yield. Use that cash to buy a house, invest, or weather the storm without dumping your long-term asset. It's freedom. On your terms. Go to zappobank.com/pomp and check it out. So here's what we've learned. The 2022 meltdown wasn't a crypto-only problem. It was a finance-wide shockwave. Politicians are using fear to slow something they don't understand. Stablecoins and DeFi tools like Core and Zappo are becoming viable financial alternatives. And Bitcoin? Still standing, still growing. If you're into Bitcoin, AI, or smart investing, this is a must-watch. Don't forget to like, subscribe, and drop your thoughts in the comments.